You should just stop controlling interest rates, let them rise to the level they should go to right now, and then you've got the inflation under control, bango. But they don't believe in doing that.
It's
so with them
for many Americans. Look, experts, economists have said themselves that this would be the Inflation Reduction Act would.
Ladies and gentlemen, welcome back to episode 72 of Pounding the Table. We are back in full force. I'm here live with my co-hosts Anthony Ohion and Joey Salicho. We are going to fully send it this week. Just like FedEx, the market has not been fun. CPI misses, the market expecting the Fed to increase 100 basis points. QT coming, NASDAQ is falling. There's a lot to talk about as always. But before we get started, if you guys have not checked us out on Stocktwits yet, you're missing out. With over 6 million members in the community, it is our favorite place to go every single day just to get a pulse of the markets. We're constantly checking out the trending tickers to see what everyone is talking about and getting a sense of the sentiment of the market. They just recently launched a new trading platform on Apple iOS where you can go and buy your favorite crypto and stocks, all commission free. So if you have not already, download Stocktwits on iOS or Android. Check them out on stocktwits.com. Build your watch list, follow your favorite investors and trading, and get a real-time pulse of the markets. Securities transactions are conducted through their broker-dealer, Stocktwits Invest. So let's get rocking. CPI misses, Joey. Even after Yellen said we should expect a lower, it was 8.3 versus 8.1.
Yeah, so anybody that goes to the grocery store, I think we realize, inflation's out of control. Our bills have been absolutely insane. And I know when I was reading this, they expected it not to be as bad because energy prices have come down. And you see a lot of commodities did peak. What was it, Tony? Like back in July, you could see they've been down a little bit. But, still year over year, it's terrible. And just from what I've seen personally, gas prices have come down a bit because we're just unloading our strategic reserves, which I guess that's one way to do it. I don't feel like that's very sustainable in the long term, especially when you see, Democrats were very against filling the strategic reserves when oil was at 20, but now they're just giddy over the idea at 80. So it's just a very odd turn of events on that front. But yeah, when the numbers came out, I wasn't shocked in the least. And I was actually shocked that the market was shocked that it kind of came in hotter than expected. But I mean, that kind of led to the point where, you talked about the possibility of the Fed raising 100 basis points instead of 75 at this next meeting. And I think the probability of that happening went from the single digits to something like 37 or 47% as of Friday. So, I mean, the odds are increasing for that. I don't know if we'll see that. It would be quite exciting if they did come out with 100. I don't know if they've ever done that before. I actually got to look up because I think, it was almost unprecedented when they came out with a 75 basis point hike. But yeah, stuff's still running hot. The Fed has no idea what to do. And now you get in a situation. I was watching someone that sounded smart on CNBC, but they were talking about these are situations where the Fed basically over tightens and, raises too quickly that, this soft landing that they've always wanted seems so far out of reach that they're just going to go ham on these increases. And I mean, look out below once that crash landing actually does happen.
Yeah, Joey, I think that as soon as that CPI came out and you heard the Fed speaker start saying, we need to raise another 75 to 100 bips, the market just took all that and priced it in right away. But what I think is really interesting is you're having so many different divergences between things that should not be diverging and things that should be going together and correlating. So there's a good tweet that Kobesi Letter wrote on Twitter, and it was markets right now. So number one, the VIX is down despite reversal and SPX down 10% in 3 weeks. That's not how that's supposed to go. Stocks trading like the bear market just started is actually true. Commodities are down like inflation is gone. Another what the F. Bonds are trading like inflation's at 20% also. And that's another thing I wanted to definitely discuss, in tandem with the possibility of an additional increase. Like you were saying, the Fed might just go way too hard and then they'll have to ease. In my mind, I'm pretty sure that's what they're going to have to do because you have to keep the constant Ponzi going. So you have to be the creator of the cycles. And so I think that a lot of people were initially really worried about the QT that's going on, right? So we had, what was it? I think we had a 5 billion increase versus a decrease last week. And I know we have monthly treasuries rolling off and everything soon. But I'm not necessarily sure that they're going to do their $95 billion target this month. I actually don't think that anything the Fed says is ever going to stick. So people have been waiting for that huge QT to start happening, but it's just them not re-adding to the balance sheet what's expiring. So they're not necessarily fully actively just selling, especially when they're trying to do both. There's only two tools that they have, right? It's the balance sheet. That's like the monetary and the fiscal policy. So they have interest rates, and then they have what they do with easing, and then the balance sheet. If they're doing both types of deflationary, contractionary things, does one break the other? Does one exacerbate the other and cause us to finally go back to 3,400, which is going to be where I know everyone's minds are thinking we have to retrace the move. So we have to go back to 3,400. But we keep getting this reversal pressure that happens every time the Fed is like super, super hawkish right now. They've done this like 10 times in the last year. They've gone from hawkish to dovish to hawkish to dovish. And it literally is they're just playing on where the market's going. They're using everyone for the exit liquidity, because you can't keep going insanely contractionary as everything just keeps diving, because they need bids to sell into or to roll off and to raise into and all those things. So it's a very precarious spot. One last thing that they said, the Kuvesi letter wrote, it's like the SPX sentiment is like at that 5,000. And it's shocking that after all these different things that have happened to the market to cause it, that should cause it to just dive 50%. I mean, if you look at the conditions right now, it's definitely worse than at like the beginning of the pandemic. And when we shut everything down, the markets crashed 50% in like 3 weeks and then bounced right away because of all this easing. So I wonder if the Fed's trying to like create another situation where the market's going to go down to, 3,400 or 3,250, kind of those huge levels, and then ease it back with whatever is going to like have less long-term lasting effects. I don't know. We'll see.
Right. So that same tweet, actually had it pulled up because I wanted to bring up the same thing where, you're talking about, these 5 main things that just are trading all over the place. And near the end of the tweet goes, the system is collapsing. So when you see these 5 big gauges, it's almost like, say you're in an airplane, you just see these main gauges just like spiraling uncontrollably, just not giving you a solid reading. That's pretty much what it is. Like if the US economy were a plane, like no one knows what the hell is going on and the pilot's blind. So it's just a double whammy of not knowing what's going to happen. And it's an ugly situation.
Yeah. And I think what's another really interesting thing to think about, Joey, is that like, if the market is like, going to collapse and like the Ponzi is going to collapse, is anything the Fed's going to be able to do going to matter in the short run? Who knows? Like maybe it'll take just time.
And that's kind of like where we're talking. They don't know what's going to happen. So they're just going to raise so fast, because when something does happen that's overly bad, then at least they can say they're doing something by cutting rates. The problem is they have not been unwinding the balance sheet like for crap. Like, they should have accelerated that. They should have been doing, quicker increases while unwinding this balance sheet quicker. But no, that balance sheet's still so beefy. Rates still aren't nearly where they need to be. Then it's
and
like,
how would fix this, Joey?
You can't. Like, that's the problem. They should have been increasing rates like 6 months before. They should have been unwinding the balance sheet quicker.
And they should have stopped buying so much on the balance sheet every month when they were saying that they're like, this is what people like last November, they're like, oh, the Fed's going to start QT. It's almost this November. And they're just now maybe kind of possibly starting. And so that's the craziest part. And there's a 2-month lag on all this data at least, right? Like from the time you pull the oil out of the ground, from the time the Fed sees the inflation data that also has the lag because the prices go into the data that the Fed...
They hold off though on QT for like a little longer.
The only way it would matter is if it was a Republican in office, because Democrats are buying oil at 80 a barrel, not negative 37.
The problem is they're not making it more difficult on the market, or they didn't when times were good. So now they're being forced to make these moves when the market's bad. And that's what makes bad seem horrible. And the problem is they have to keep doing it, because then to be able to come out of this is when they, put rates back at 0 and start loading up the balance sheet. But they didn't do the other side of the coin to get to where we need to be. So if they start, cutting rates and loading the balance sheet again, it's like they're going to be in such a bad spot next time around that it'd be more of a ticking time bomb than it already is. So this is where, like we've said for months now, that this Fed is just, we don't know what they're doing. And
They don't know what they're doing, Joey. They don't know.
Speaking of the FedEx, they kind of, is that a leading indicator, right? We just saw Twilio did some layoffs last week, 800 people. So
yeah, 11% of the workforce, and they were saying they're being very selective, which I found that to be kind of rough. Where it's like, hey, yeah, we're gonna make sure we get rid of the worst people.
yeah,
It's like that's really gonna make
like, all right, you're that as an employee.
yeah.
I mean, I said that such a long time ago on one of
That's what happens at every company, right? They're not firing the best people. I mean, sometimes they will fire someone, more expensive, but it's, they're looking at individuals. Are they produce
utility? But we said this on I don't remember which pod, but it was many pods I said this on, and it was a long time ago where I was like, be surprised, but in 10 years, I think half the workforce will be not in work and we'll have to do some form of EB. I don't know. Yeah, I don't know. But I mean, think about it logically. Like if the only way to get through this is by not having to spend a lot of money, you're going to automate, and automation's cheaper. And then people get shit out of luck. And that's just the way the cookie crumbles. They will own nothing and they will like it. And it's unfortunate. And that's just the world we're going to be living in. And the biggest thing that I think I want to hammer home right now, Avi, and I know the midterm run up, whether it's there or not, the Democrats literally are not looking at anything right now. They're just like, oh, maybe I can get some votes here or there. The Fed has their blinders on because they know that if they, like Joey was saying, if they start to do things backwards and they don't keep pressing when inflation's 8%, they are not going to get out of this if they start easing now. Imagine if they started easing right now. Imagine if they did something to make the market go up. Do you know what would happen? It would go down to 2,500. Because then the Fed's just trading with the economy. The Fed's just buying and selling when they want, basically, effectively. And it's just not possible. Even Trump couldn't have a say right now. So that's the craziest part. It is far gone to the point where nobody cares who's in office. Democrats and Republicans won't exist in 10 years anyway, because once we get to 2030, we'll have polarity of religion and secularism, and then it's just going to go away. So that's just the way the cookie's going to crumble in America, thank God. But independence 2024 is my new call.
2024.
Well, let's get back to FedEx. So FedEx come out, basically pre-announces horrible earnings, and that kind of set the market on fire. So we know, hey, inflation's out of control. People are going to buy less, and the Fed's raising rates. So the big purchases, they're forcing the slowdown when it comes to purchases of homes and cars and everything like that. But yeah, so FedEx basically says the shipping volume isn't where they expected it to be. And then he makes it kind of worse, saying, we're entering a global recession, that things are much worse than it is. Then you've got companies like International Paper and Packaging Corporation of America. Their stocks start tanking because, hey, people aren't shipping stuff. There's not as big of a demand for cardboard boxes as you would have thought. So it's kind of something that people would expect in a worldwide slowdown. Now, we knew the U.S. economy is already in recession, has been so, depending on how you define what a recession is. If you use, the textbook terms, we've been in one for a while now, and you look globally, and the stuff going on in Europe, the energy crisis, everything else going on over there, their inflation's out of control. Clearly,
that's really sad over there.
Yeah, it's a horrible situation there, but yeah, you've got all these economies around the world that are bad, and it took the FedEx CEO, I guess, making it clear to everybody, someone that has their hand on the pulse of the global economy, saying what we all kind of expected, just kind of made it a reality for everybody. So yeah, FedEx and UPS are always one of those gauges of who's shipping what. Now, they don't have all of Amazon's activity, but that was kind of the big thing that we saw from them. And now people are more questioning, mixing that almost with what the Fed said, saying, okay, it's not just the US, it's the whole world. How bad could this get systemically?
Joey, let me poke your brain for a second here and see what you think. Amazon obviously is trying to bring shipping in-house, trying to compete with the way that they're doing shipping. And Amazon's obviously such a large percentage of what's being shipped now. But also, there are a lot of apps now that are being created. It's this whole, and I'm sure one of these will IPO, and I will definitely be a buyer of for example, Whatnot. That's the name of the company. But there's a lot of streaming apps now where people are selling things, and the only way that people send things out is through USPS, because there's a company called Shippo, which makes the pre-packaging labels. Now, I don't know what percentage it is, and I don't know like where, what's the situation with all that. But I do think that there's like something to be said for just that industry changing, because Amazon's, trying to bring it in-house, because there's other companies that are using these like third-party prepaid shipping labels versus FedEx. So I wonder if it's just like, hey, FedEx is the most expensive one out of all of these, even though it's the fastest, quote unquote, but it is very much so very expensive. Are people just not using FedEx and just using USPS because it's cheaper?
I mean, that makes sense. I think of, everything that I get that comes from Amazon. Now, there is a fulfillment center somewhat close to me, but everything I ever order from Amazon either comes directly from a Prime van or comes from USPS. So, and if you order from Poshmark or all these other big sites, yeah, they're all USPS labels. Almost. So
Lindsay was just saying in the background, she goes, I return things to Amazon and there's a free drop off with USPS. So I'm going to do that.
Yeah. Whether it's USPS or Kohl's or somewhere. Yeah. They're removing the need for USPS or for UPS and FedEx out of it. And, I even I always like to see, where I always order stuff from. And, I always get, it turns out to be Shopify. So it pops up on the shop app, whether it's Viore or, anything else I order. And yeah, it's all coming USPS, which is funny. So yeah, I definitely think you're onto something with that, Tony, that people are looking for the lower cost ways. Now I know USPS has been criticized because they're almost, shipping at a loss and kind of being a partner of all the other big shippers. But yeah, it's definitely an issue there. And I think, it could be that the competition of Amazon is basically forcing people to do that. And Jeff Bezos has always lived by that whole create, your margin is my opportunity. So he might be pricing out UPS and FedEx, and they're going to have to, get with it or get out of the way.
And I think it's because of the economy too, right? Like obviously, like you go to dinner and like most people, they're not going to buy the ribeye anymore. They're going to buy like a salad, maybe no appetizer, right? And like you're going to tip a little less than you used to. Like you're going to buy like the slightly cheaper option, and you're going to pay for that shipping, whether it takes 2 days more, it costs half the price. So I just think people are going for the lowest option. And I'll tell you what piece of data actually gets me going with that. I have this chart here, the quarterly change in US deposits at banks. Take a look at that, guys. Take a look at this right here. It is a fat down candle. It is like the only one in the last decade that's even remotely that fat. So people are taking cash out of the banks. And why? They got shit to spend. People are not storing money in the bank because you only store money in the bank when you make more than you spend. So people are down atrocious. And then also, when you look over here and just realize that, look at there was a tweet that came out with Fidelity the other day. And it's saying that like, I think about 30% of all the accounts that were over $1 million are no longer over $1 million. So like the distribution.
4 billion. What's the math on this? It's negative 0.25. And this is in.
Less so the math, more so the actual degree of like comparative for month over month, right? Like the last ones were like slightly a little bit down. This one's like a freaking huge limit down bank deposit run, right? So even the US, which is infinitely stronger than any other country by a mile in their banking system, because we are the standard for all commodities and everything. Like we are the standard for FX. We're the standard for pairs. We are that guy. So not the fact that we're getting diddled. Think about what happens in every other country, right? Like think about how far you can put money in. I think it's either Venezuela or Argentinian bank, and you can get 75% on your money in a year, almost, as long as it's still there in a year. So like that's actually how sus all this is. People are begging for us to deposit.
A lot of the world that's like just unbanked, and I'm seeing it, firsthand. And I think a lot of these unbanked countries are just going to go jump right into crypto. It's like they kind of skipped, the fiat and banking. And in LATAM, like you were talking about with Venezuela, they don't trust their banking system, right? And so like America, you think we still trust our banking system. And that's why I don't think crypto is taking off as much here as in, Africa, UAE, or, LATAM. But it's interesting if people, I think I still trust our banking system. Like I feel
that's funny. No,
I do, but like it is interesting to see this. This is
Avi, if there's more consecutive months of that, what will happen is the small regional banks and the small like savings and loans and unions around will fall. And then it gets bigger and bigger all the way up to the. I mean, I'm not saying it could. I mean, it can happen. But I'm not saying it will.
Well, I think
That's
we're going
what
to see a
2000
lot of that. I think just in general, not only banks, but I think a lot of these, like, I was explaining this to someone, like Salesforce, that level's safe. Datadog, that level's probably safe. But like below that, you start to look at some of these companies that are just not making money. And if we enter a bear, market for
we are in a bear market for a
right. It's fair. And,
Well, it's
as
crazy.
it continues, though, I think there's you're going to see a lot of merger. We've been talking about this for a while, and we've started to see them, but I don't think we've seen it yet. Like,
I don't think you can get the mergers right now, Avi. I don't think it's
once these companies are about to go bankrupt, they may sell for pennies on the dollar.
Maybe, but here's the thing too. If you try to do a merger right now, not all mergers are in stock and not all mergers are in cash. A lot of them do a combo, right? So if your share price is down, you're relinquishing your equity to investors, and people don't like that. The only time that it really happens is when things are busting. And see, like last year when we were talking about all these M&As, it was when FANG and other big, huge companies were chilling and the other ones were dying. So if both are dying, less likelihood to merge. Also, if you go and you take a loan, right? Like before, people would take loans, right? Like Apple, Facebook, all these companies, they take loans to buy things. They are in debt out the wazoo, even though they have mad cash, because it's smarter to pay with debt, right? Like you don't have to pay tax on debt. You can take $100 billion loan out, buy something, have it double, and you don't pay tax. So there's no incentive for someone to spend the cash that they have in the bank versus like the debt. And so the issue now is that if you buy debt, it's not free debt anymore. The debt now is crazy. Mortgage rates are 6%. The housing market is going to go insanely down. And so like anything that's connected to getting money right now, it's just not getting got. So I think that we're not going to see mergers and anything like that for quite some time, even if everything crashes, because everything will continue to crash.
So the other thing is on this whole M&A front is companies are going to look at, recent acquisitions and how the market has taken those. So we go back to the Microsoft Activision deal, which is getting a lot of scrutiny. And I would love to see that deal fall apart, because then not only does Microsoft save themselves $69 billion to buy them, and, Activision has some issues going on right now. It's only a $3 billion breakup fee. Imagine what Microsoft could use that same amount of cash for next year if we do enter a really bad recession. Number two is you've got Adobe, which, is kind of next on our list to talk about. They made one of the dumbest acquisitions I've seen in the last This could be the worst acquisition I've ever seen, because, okay, so you got this company Figma that is trading at 50 times sales, according to this acquisition price. So it was doing like $500 million in recurring revenue. And Adobe up and spends $20 billion to acquire them. Now, its last valuation, I think, was $10 billion last year. So if you think about where private market valuations have gone since last year, most cut in half or even more. You look at Instacart, Klarna, all the big boys, all of them have seen significant slashes to their valuations. And yet it's like Adobe didn't get the memo and goes and spends $20 billion to add $500 million in revenue. I don't care how fast the company's growing. I don't care that their margins are 90%. That is one of the dumbest acquisitions I've ever seen. And the stock reacted accordingly by absolutely tanking. And then they caught a slew of downgrades on Friday. And, that's one, I love Adobe's and its product suite, but that acquisition made it on like the no-fly list for me, because it shows me that management is almost freaking out that their growth is slowing and they'll do anything to try to spur growth. But overspending at that magnitude to acquire something like Figma shows me that, hey, this management team is in over their heads and they don't know what to do. Yeah. I think you agree with me on that one, Tony. This was definitely acquisition.
Like we were talking about this earlier, Joey. You were saying that, we were talking about how many companies they could have bought with that money. Honestly, they should have forked up a little bit more, right? Like, I love what you said, like buying Autodesk for like 45 billion or whatever. That would have been the GGs, like doing that, or even buying.
How about Adobe buying Autodesk?
Yep.
Yeah, because if they spent $20 billion on Figma that was doing $500 million in revenue, and say they go buy Autodesk,
that's like $5 billion.
Now, that's a $45 billion because it'd be a massive deal. But think of the revenue base of Autodesk. Think of all the recurring revenues. Like
I was thinking AutoZone you guys were talking about. So I was like, why the hell?
No. So like they could have bought, we talked about DocuSign to add to Adobe Sign. They could have bought Adobe and they could have bought DocuSign and Unity. Or, there's deals they could have done that would have added significantly more revenue at a higher margin. Now, I don't know if Figma's profitable or not. Even then, it's not going to move the needle enough. But yeah, it showed like they could have spent that money so well that it's just kind of ridiculous that they did that. And it kind of shows that they were freaking out, that they thought, Figma could steal their user base long term and they wanted to acquire it before it became an issue. But it's like, just create a better product suite that keeps people here. Don't overspend to take out a competitor. That's just ridiculous.
Dude, what they could have done, Joey, is just bought any of these other companies, waited like 4 or 5 months for Figma to actually eat shit, and then bought Figma for like 10 billion.
That's the thing. So if Figma's last valued at 10 billion, it's like the chances are the valuation is closer to $4 or $5 billion today. Or if you look at $500 million in sales, I mean, honestly, even if it's growing triple digits in this market, that trades at maybe 10 times sales.
Maybe. Yeah.
So you're talking they should have spent 5 billion, not 20. You would have had enough left over to buy Unity and Procore at that cost. It's ridiculous. And I know they did all the interviews on CNBC, all this to try to justify that massive mistake. But it's like, sorry, man, it doesn't matter what you say. That was a ridiculous acquisition and you're going to massively regret this.
Yeah. I mean, Joey, it's a perfect segue into something Druckenmiller said. And he's like, I've been doing this for 45 years. And between the pandemic, the war, crazy policy response in the US and worldwide, this is the hardest environment I've ever encountered in trying to forecast the next 6 to 12 months. Why would Adobe try to factor in the next 5 years of growth when the next 6 to 12 months are completely up in the air and Adobe could already go down, right? Like 50% more from here. What if Adobe just gets completely wrecked because they did this huge acquisition with $20 billion that they could have used to save themselves in some other way? Or who knows, they could have picked up Autodesk for $20 billion. Imagine that everything crashes and Adobe was like around 400 before all this stupidity. And if they go down to maybe 300 normally or 250, they could still buy Autodesk for half the price.
Exactly. And so that's why, I own Microsoft, and that's something why I hope that this deal gets blocked for Activision. Yeah, they have to pay a $3 billion breakup fee if this happens. But that then means that they've got, $65 billion plus that they pretty much allocated somewhere else that is now freed up. Now they can wait for this market to worsen over the next 12 months and they could buy multiple companies on the absolute cheap. If they want to go after the gaming space, they want to do something else. Like, I would rather these companies have this massive cash hoard and just wait. So yeah, that's where like Adobe's management team, if they really wanted to say, hey, we got $20 billion to spend on M&A, they could have been like, hey, let's wait 6 to 12 months because this market is horrible. Look at everything that we just saw. And yeah, they might have been in talks for the last 2 months, but things were just as bad 2 months ago as they are today, that they should have just known, pump the brakes. Let's see where this goes. Imagine how many companies we could buy in 12 months with this same amount of cash. So it's just one of those deals that I was scratching my head, and I've used Figma before. It's nothing special to me. Maybe I don't get it, but even if it's an absolute game changer, that does not mean you overspend that much.
Do we tag Shantanu on this, in this podcast, the CEO?
I mean, if he wants to try to justify it anymore, I heard him talking in circles on CNBC before that. I'd just be like, dude, every excuse you've given thus far has not been good enough. Like
the good old subterfuge.
We got some breaking news on Twitter, social media. So the U.S. Appeals Court just upheld the Texas law that will bar large social media companies from banning or censoring users. So this is going to probably go up to the Supreme Court, which is going to be a pretty wild case, I'd imagine. And Twitter has got their own things going on here with Elon Musk.
Twitter, I would never buy because, it's just an absolute dumpster fire. I mean, I left the platform for a reason years ago, and it doesn't seem like it's gotten any better. You look at just about any social platform, like Snapchat has had its problems. I'm not a big user of that one. The only social media platform I would want to invest in right now is TikTok, but it's not publicly traded.
Yep.
It's stealing so much time.
They have their own shit with China. They're talking about.
Oh yeah, they definitely have issues. They have privacy concerns and all that. But there was a study that came out, I think last week, that said like the average TikTok user and the amount they spend, and then Instagram was 1/10 of the time that people spend on TikTok.
Yep.
I found very accurate because I found myself scrolling some funny videos on TikTok, and I might glance at Instagram for like a minute. But yeah, I think the social space is very tough. Meta, yeah, I would not touch Facebook here. I mean, that thing is just.
I like Meta in like 5 years when everyone.
Why? Bobby, tell me why.
Like, here's why. Because what you were saying earlier, I think people are going to be sitting at home. They're going to be playing video games. They're going to be going into the metaverse. And like, I think it's going to take them a while to get there. But you can't cut the Zuck. I mean, that like eventually.
Yes, you can. I think Facebook dies.
I think Facebook as a platform is already kind of dying off, obviously.
Yeah,
exactly.
WhatsApp and all these other short
things.
The metaverse in like 5 years, unfortunately, I don't want this to happen.
Nobody wants to go through Facebook for the metaverse when Zuck can track your IP and crypto is all about anonymity. Like, I think Zuck just diddled himself like after this Senate Congress.
Need to be with crypto. I mean, then you could just go.
Well, it doesn't matter. You think that 30 and 40-year-olds are like the generation that matter for social? TikTok,
Instagram, dude.
Like Instagram for 30 and yes, they do. Avi. Okay, so this is how it works.
I'm
the only person.
Virtually.
And they're not going to do it on Facebook. I guarantee you that. I'm the only person that actually has a pulse on what's social these days. And I'm telling you, Facebook's dead. And I'm telling you that Instagram will die. And TikTok's algo is, like Joey said, it'll addict anyone. My mom
it's amazing
hours on TikTok.
Yeah,
okay.
Yeah. Sometimes I don't even know how I got into TikTok.
Exactly.
Like,
they don't even know.
An hour into the thing.
You only know 2 hours later when your thumbs hurt. So here's the thing. If Facebook's all about like just honestly middle-aged to old people using it, what happens when like, you know, as time goes on, there's like a different shift, right? And like no kid my age or younger has a Facebook, Avi. Like I don't even go.
I'll buy the next Instagram though.
No, so that's the thing.
It's TikTok. That's the next Instagram.
But TikTok will get overtaken at some point.
It won't. It simply won't. TikTok is the number one best startup of all time.
People would say that about Facebook, years ago. But I'm just saying, technology.
How are you still bullish on Facebook?
Well,
I'm saying in 5 years from now. I don't think the next 5 years it'll do much.
You guys are going back and forth on the same thing. So Tony's right that, these certain platforms are trending, but the companies have to constantly acquire like the next big thing if they're not building it themselves. So Facebook or Meta, which I feel like they should have changed the name to Instagram and then to Meta once that became a bigger thing. But that's a whole other conversation. So think of like Match Group. Match.com was a big thing in online dating. Then they keep acquiring other brands, or like they launched Tinder, Hinge. Like you got to constantly keep launching these things that people get onto. Now, Facebook, they've made a bunch of small acquisitions. You look at their acquisition history, they've made a lot of deals. But I feel like, they should have made the Snapchat deal happen when that thing took off. Or, they've got to keep acquiring the new thing, but they're a serial copycat. Like that's always been what they've done. Snapchat took off. They had Instagram with their filters and sends and all that. And they've had a lot that work out, but then they had, like they tried to do their version of Pinterest and it didn't work out. They shut that down. They always have where they're trying to do their versions of other things and it just has not picked up. That I feel like they're going to have to make a massive deal in order to have that next big shiny brand to go with Instagram, Facebook, and WhatsApp. But then you get in the situation where they are so big and have such a large share that it could get scrutinized and actually blocked. So when you're saying, how do you, look 10 years from now and not own it? I look at it and I compare it to Google and like their properties that if I want access to the advertising space, but still be diversified across different industries, like you compare Google and Facebook, even though Facebook's more attractive on the valuation front, Google's properties are significantly more valuable over the long term. That I compare those two and it's like, I want to buy more Google here and just avoid Meta entirely until something changes and justifies me wanting to acquire or wanting me to invest in it. So it's just really tough space. And I definitely feel like they are losing ground to other players, especially TikTok.
Yeah, I won't deny that the Facebook property as a whole, yes, like Facebook itself, right? And then I think Instagram potentially could die off. Like I honestly don't, I'm on Twitter the most. So that's just, I don't know. I just constantly need to have news. That's just who I am. But I know my wife, most of my friends are on Instagram the most. Kids that are in high school, no one texts. They all just go on Snapchat to text. Yeah. But the one thing that I will say is like Snapchat, the TikTok, actually TikTok's users are older than I thought. But Snapchat users, like they just don't have the buying power. So all these brands are doing advertisements, but they're all in high school, have no money to spend. So it's like, they're not probably getting the CPMs that a Facebook, where these older people have money to actually spend, and Instagram and such. Like, that's not even where I think Meta, is going to go. And I think it will take them 5 years. Like, again, I think it will take 5 years, but I do see this direction that you were talking about, Tony, earlier in the podcast, where like there are going to be machines to take the jobs of all the McDonald's workers, right? Like AI is going to get so good that, people that when you call someone at Delta, you'll think you were talking to someone, but that's going to be an AI bot, right? So
using this exact logic that you're talking about, so like Facebook got so valuable because their user base, that using the platform, they have the money to acquire or, purchase something that they see in those advertisements. So TikTok, their average age, those people are, people with purchasing power that actually make decisions. And there's a lot of ads that I come across. I'm like, oh yeah, these are cool looking supplements or a new protein, whatever. But then, if that's the case, then Snapchat would be very attractive here that, their growth rate slowed. But if they have such a stranglehold on Gen Z that people use it for like everything, whether it's sending money, texting, everything, kind of like we use WhatsApp, younger kids are using Snapchat, then it's almost like their user base could be 5-6 years from just absolutely exploding. So
but here's the thing, we're recorded though. It's like the data centers that they have, like no one really thinks about that. Like Snapchat, I believe they're still using Google Cloud as like they don't have the amount of data centers. So if people like leave Facebook, they could use, I don't know how that fucking works. I'm in sales. I'm always like, just click the button, guys, and it'll work. But you could, I would imagine, shift some of that data from Facebook dying off into Meta, and then the massive amount of money that Snapchat will have to go and spend to build their own data centers. They can't scale as fast as they think they want to be able to. So that's something to always kind of think about.
Here's another thing, just the last part of this. Everything that we're talking about where these things can go, TikTok's already there. You can go on TikTok and you can buy whatever the hell you want instantly with people there. And I'll tell you, just from my own personal experience with this new business I'm starting, you can make a ton of money selling live like this, especially when you combine it with the algo for exactly what people want to buy. That is exactly what TikTok's doing. You go on TikTok and you search up anything, you can buy collectible cards that get ripped in front of you. You can have a lady who has a big vat of rice. Okay. Literally, I've watched this lady, huge vat of rice with tons of crystals inside. No. It's like it's a weird little thing that looks like it's a tumble kind of thing.
Like the witches.
Yeah.
Cauldron, a cauldron.
And a cauldron, basically. And it moves. And so what happens is like the crystal, there's people working with this lady to just keep throwing in like crystals. And people pay $60 a scoop for this. Okay. The difference in what Facebook is and what TikTok is absolutely unbelievable. TikTok, if anything, will buy Facebook and just change it all. I will make that call right now. Like I think Facebook had an opportunity. Facebook fucked it. And that's it. Like, you're not going to get the users that are new.
I think they're in their 4 or 5 year drought right now. And then I think
they're in their 4 or 5 year drought.
I think they'll be like Microsoft.
They will simply not, bro. It's such a, no, 0%. I'll bet you 1,000.
My bet is, again, just that people will need to be on UBI. There's a lot of people that are going to be at home and
they'll spend their time on TikTok.
They're going to be playing games and they're going to be
on TikTok.
I don't know. We'll find out. We will find out.
My generation.
Last thing to kind of roll this around is, we poked holes in both sides of this so much that Facebook/Meta clearly does not follow the KISS method of investing right now. So that's kind of how I've justified it. It's like, there's too many negatives to go against. The positive is it's very cheap. The problem is, if the best argument for a stock is that it's very cheap, you can't just go off that, because what's to stop this from going from 13 times forward to 12 or 11 or 10? Like you just can't,
or 0.
There's no reason it can't. So that's where it's like, this seems like a value trap to me. And, I thought it was very attractive to like 180 or 170, and it just keeps going. So that's where it's like, okay, if something's cheap and just continues to go down, this could just be the ultimate value trap. What's to stop it to go, 8 times or 7 times? Like, I just don't know. But I know there's other companies that are trading at significantly higher valuations, whether that's a Google or an Amazon, a Microsoft for that matter, that if they go lower, I would be confident to add to my position. Where Meta, if I bought it, it would almost feel like more of a trade, that if it surged, I'd kick it. If it came down, I would just want to cut my losses and walk away. And if that's the mindset I have going into an investment, I just don't touch it at all.
they should have full sped into the metaverse all that thing when it was like, it came in like right at the end. And that's just like even worse, like if they were in right as it was happening at the beginning, I'm sure they would have captured a huge market that would have given it the chance and the legs to like keep iterating and building and acquiring. Like you said, Joey, they're in that tough spot with like, if they buy Snapchat, are they like, are they getting closer to being the monopoly? Like Congress hates Zuck already.
Yeah, so they already had Oculus. So I feel like
right,
metaverse is all the rage. Just ride the wave and say, hey, by the way, we own Oculus and like 90% of headset sales are headsets. Like be like that. But yeah, they went like all in on the metaverse. It seemed at least like
They changed
their name and everything like that. Yeah, I think they did it at the wrong time. And when you saw Unity and all these other ones, Roblox, everything kind of peak out. That's they're changing the name too, and it just kind of like been a massive fall from grace. But
yeah,
listen, I'd say for 5 years, I think you guys are right, but I think eventually we, unfortunately, and I don't want to live in this metaverse type of world, but I think there'll be a time where you go shopping, you just go to Instagram and all these retails that
but that's already happened. It's hard for me to say that because there's
not in a ubiquitous way.
There is a ubiquitous way. I think it's a generational thing.
30% or 40% of purchases you go try on in a digital mall. Like, why would you go to the mall if you can actually try it on with VR? And I think they have the relationships, they have the data centers to handle something like this. I think it gave them 5 years. It may just sit and do nothing or go like a little bit lower. I don't see it dropping another 30, 40%. And I think the upside in 5 years is higher. But
yeah, see, if they can show some accelerating growth, things start to improve, over the next couple of years, it's definitely one that I would revisit and could see like, or justify an investment. But, right now it's almost like you're trying to pick a bottom. I would rather let it bottom out on its own and then kind of like buy on the way up as the fundamentals improve. And that could be, they crush an earnings report, surge 20%, and then it keeps running up. Then you finally regain confidence. But this is a situation where it's a falling knife, like trying to catch bottom. I would much rather let this bottom out on its own if the fundamentals improve and then buy it on the way back up. So yeah, if like 5 years out is your justification and you want to start buying slowly, but I've always found it much easier buying something on the upswing than trying to pick a bottom.
You're not wrong. Where's the bottom on Twilio though? I need to. Where's
zero? Well, if you want to buy something,
everything's zero.
Avi, it's I said this when you were like we were talking about
Twilio's going to zero.
When we were talking about how it's going to do on like it doesn't matter like down to shit.
It's been getting crushed for sure,
and it will keep getting crushed.
They just laid off 800. They're supposed to do profitability by next. I think it's next quarter.
All right. Sure. If they do, then they maybe don't go to zero. But here's the thing: like
Twilio's not
any of. I bet you think that, but
I'll bet you that it does not.
Avi, like 20 might as well be zero. What I'm saying is that if these companies that don't do the things that they're going to say, we're like, oh, let's do profitability. Like they don't, and then that's it. Shine. It's Japanese for die.
And they just fired their 800 people to help with that.
How much is 800 people? 800 times 200 is what? $16 million a year. Is that enough? No.
So Tony's been right on this one. And I will say a big problem with Twilio now is if they do achieve profitability in the fourth quarter and say next year is their full year of profitability where they're showing it consistently. The big problem is they're going to be showing profitability when their growth rate slows to the 20%. Now it could be upper 20s, but then you get in a situation
fired people, Joey, so they can't.
Yeah, you get in a situation where the growth rate's no longer flashy, like when it's growing 60, 70, 50%, all that stuff. If their growth rate decelerates into the 20s, they're just turning into profitability. Then the multiple seems so extended on an earnings basis when you've got other companies growing the top line faster that have been profitable for years that you compare those two. It's like, okay, this seems like a better investment than Twilio now. And, I've loved Twilio for a very long time, owned it for a very long time. I no longer own it.
I sold that 90. I actually don't own it either, but it's obviously one I'm always watching. I sold at 90, so I'm feeling good right now, but it's got to be bottoming out at like.
I bet you
60?
think.
I think 60.
Avi, I'm telling you, dude, if the market cracks 36.50 and the market goes down to where like the most logical.
And honestly, like the way they make money is companies spending money, and push notifications and
and
and things like that.
This all comes
scale that back, right? So Yeah.
This all comes back to timing of companies and when they choose to make these big decisions. Like Twilio, had it become profitable during all the pandemic and everything, like consistently, and like had long-term prospects for keeping that going, it'd be fine. We have a different conversation. Look at the trade desk. The trade desk is a perfect example of what you want to see. That company came out of nothing. Like where it was $17, $15 or whatever before all this pandemic crash, bounce, all this stuff. They not only split at the best possible point that they could split, genius move. So that saved them on liquidity for falling. That's number one. Number two, they were always focused on leg growth of profitability. And so they are at 63 right now. That is great. That is fantastic. TTD is a 10 or 10 out of 10 just because of that. Because they split at the right time with the management decision was being right. And they're not dying on their whatever the market's doing now, it's holding that earnings gap. And that's like a huge thing I know that we were talking about on many other pods. Like, look at the companies that are holding above where that report, their most recent report is. You look at Net holding above. You look at Mealy. Literally, Mealy is bussing. You look at Net, Mealy, CrowdStrike. You even look at Snow, right? Like you have all these companies that are holding the line. Everything that's not holding the line is dead. It's that simple, I think.
So yeah, you do make a good point. So like one thing is, I always doing what I always do, reevaluating all my positions, see, where I'd rather have my money parked, especially if things get much rockier the next 12 months. CrowdStrike's one that easily passed the test.
Right.
You've got, I think my largest positions are like the ultimate keeping it simple, stupid method where it's like, CrowdStrike, Amazon, Google, Microsoft, I think Disney's in there. So, it's companies that I could justify owning even in the most difficult of times because I know they'll be fine long term. I still own MongoDB, but that's even another one that I'm reconsidering. Would this capital be better repositioned elsewhere if, their growth decelerates as they turn the corner on profitability? So I've owned these companies for years. I have, massive gains on them, whatever. I don't care about those. I think what's going to be best over the next 5 years or the next, even what's going to be not as rocky over the next 12 months and still give me significant upside over the next 5 years. So CrowdStrike's one of those easy ones. Cybersecurity is becoming a bigger issue than ever. It seems to get worse every single day. And CrowdStrike's just the gold standard, right up there with Palo Alto Networks, which is another one I'm considering. Would I rather own, the top two players in the space that are differentiated enough to justify owning both, or, just continue adding to another? Now, I do love Mercado Libre, but I do have worries about them as we enter this global recession because, they have such a huge position in the Latin American market. They are more price sensitive consumers where if, unemployment becomes a major issue down there, then, or say inflation takes off more than expected, that could be one that takes a direct hit. Now, the good thing is that Shopee, was growing very quickly in a lot of those Latin American countries, and they did shut down those operations, to at least, brought them down. But yeah, so you do have a lot of these companies holding line. And I think, you kind of look at a CrowdStrike, and those are the types of names where, they're still growing fast. They've got the free cash flow and the story's still playing out and the total addressable market's expanding, that you could justify beefing those positions. And it's one of those companies that I can sleep well at night knowing, it's my number one position where if say a Netflix were a top position, it's not something you could sleep as well owning.
Joe, yeah. Here's my counter to the Mealy thing of the potential, it's not going to hold the line. All the changes in FX that would have affected Mealy already happened. I'm not saying it can't further happen, but we've already had multiple quarters of absolute insanity against FX pairs all around the world and commodities and everything you could possibly, people moving money into the US as much as they can. Mealy beat by 100% on EPS. In my opinion, if it gets worse, Mealy's fine.
Yeah. So that's the one thing I will say is they have a heck of a management team and a heck of a business. And it does, it is very profitable. It's going to become even more profitable in the years ahead. That, yeah, this is a company that I absolutely love the fundamental case for it over the long term. But yeah, I do think it could go either way near term, but they have constantly delivered. So why would they not deliver, as over the next 12 months. So,
And they have Goldman money.
and they got Goldman money, and they got PayPal money a couple of years back, right?
Yeah.
All right, Avi, we'll get back to you now.
Well, I was saying we should wrap it up.
Actually, there's two things I want to touch on, Avi. I got a bunch of charts here that I've just been looking at because, a lot of them go against each other, but it all makes sense. So, take from it what you will. So there's a chart. I know Peru posted this where he's saying, like the Nasdaq's closing in on this like 40-week EMA kind of situation. And historically, yeah, that works. But if that breaks, great line to know that it's going to get far worse. So that's one thing. The second thing, S&P generated a 50-to-1 downside to upside decline average ratio. And that's occurred 18 times since 95. Historically, 120 days later, the S&P gained in price 100% of the time with a median gain of 17%. Take with that what you will. Because then here's the FUD. So 40-week sentiment has never been bearish than before, ever. Like has simply not. So that's ridiculous, right? Like retail investor sentiment is as bad as it's ever been. That's one more thing to note. Second, we have the most highest by an absolute like insane mile of hedges that were bought like, a few weeks ago kind of situation. And obviously most of the hedges are, they're not a year plus out, right? Like, so we had this monthly OPEX, which was quad witching, which was last Friday. Was all that selling just to get those hedges, like in price, and then we bounce from there? Who knows? Let's see. But those are just all things I want to think about. And the last thing is the housing market. Okay. You could have, bought your home in the peak of the crash at 1.8% fixed, or so 2%, whatever, very low. You can buy T-bills now that give you 4%. And I saw this tweet. This guy's like, my T-bills are literally paying for my house. Insanity. And that just is just chirping away from the Feds, like what they got in their pocket. That's ridiculous. That's another thing to think about too. But then you go and you look into what's actually on the balance sheet. How many like swaps, MBSs, all these things that are on the balance sheet. And what happens when we get this housing collapse? And it's coming. And it's already happening. And I called this like back in July, like that was the top. And I think that like, you're getting these mortgage rates out the wazoo now over 6%. And it's people were doing the same thing. Like if you saw like the Michael Burry.
I was going to say, call you Tony Burry. Sorry.
No, I mean, that's why I said this back in like July, whatever. Like it's all reflective.
That's sad. It's people like me are secretly like cheering for, housing crash. People that have not bought a home.
Right. But here's the problem, Avi. When the housing crashes, like, people will lose their jobs and everything gets more expensive because it's reflexive, right? Like the housing prices go down because inflation went so high, and assets can move up and down. But it's a lot harder for things on the shelf to move up and down in price because selling is all about anchoring. You anchor somebody to $7 for milk. You don't have to change it back. So
you know what all of this is, Tony? It's just how
behavioral finance.
How the cookie crumbles.
Why do you host?
I think you said that like 3 or 4 times. Earnings
I know.
Next week. Got earnings next week. Nothing too crazy. AutoZone on Monday. General Mills, KB Home on Wednesday. Accenture, Darden, and then Costco is actually probably the biggest one of the week on Thursday. So, Joey, I know you were mentioning, don't forget Costco.
I'm interested to see what we hear from companies like AutoZone, General Mills, and Costco, just because such a great pulse of the consumer. We were talking about, or you were tweeting at somebody, about Home Depot and Lowe's on Twitter. And so I've been looking at Home Depot very closely because it's one of the situations where people aren't buying and selling homes. They're staying put. So they're going to be fixing up on their own. So you see the demand on like the retail side, but then you see a decrease on the pro side of the business. So it's always why like Home Depot is that steady Eddie, constant, monster that always seems to figure it out because, if one side starts fading, the other side picks up. And you see like AutoZone is always one of those where, you got their constant people that are always fixing cars on their own, or if people aren't buying and selling cars, they're going to be fixing up their own. I've been in AutoZone twice in the last week because I had batteries crap out on me. So it's one of those where I'm very interested to see what they say. And same with Costco, they always seem to figure it out regardless of the time. I don't know if they'll have good commentary on what they're seeing inflation wise, but Darden's going to have the same situation before the market opens on Thursday, where you'll have a really good feel for at what food prices are doing. Another one you can always look at is like Chipotle, because they always have good commentary on that front. So other than that, KB Homes, even see where housing is at. And I think it was Unusual Whales had posted, some crazy put volume in KB Homes. So someone's expecting that thing to crap the bed. But I will like to see what they have to say on the housing front. And, we always get the Redfin report, the drop in mortgage demand or all this stuff. So hearing it directly from a home builder is always good, since, that's no more boots on the ground than that.
I got something to add, Joey. You know how the car market was like incredible and you could just make money dumping on Carvana, which is why they died, like Zillow and like everything else. You could flip a car all day long for 3 times what you paid for it if you just added a little niceness to it. Like you could buy like a $2,000 car a couple of years ago and then you could have flipped it for like 10 easy. Or like a Honda Civic from the '89 was like 10 grand. So like people were spending money on auto parts, and I'm sure that they raised the price of auto parts because supply chain constraints and all this. Now I'm sure the inflation's carried it up, but people are not doing as much with cars these days. And like we have this change that's continuing to grow. Tesla crushing, right? Like Tesla's almost at what they did last year, this year already for the halfway mark. You don't need to do anything in AutoZone for my Tesla. I've never been to AutoZone. So I don't know, man. Do these companies all die? I think so.
Everything to zero. You heard it here first.
No, man. I think this is the reset. This is when things change. This is
another situation. If people long term can't afford homes or cars, where the whole you will own nothing and like it. If people don't own the cars and it's all Teslas or lease or something like that, there will be no retail demand for
it's
that.
The robo taxis from Tesla, driven by the Tesla robots. I swear on everything.
Tony's making some bold calls this pod, but it could make some great clips 10 years from now if everything happens that he's saying.
Well, in 5 years, I'm going to look at Meta's price at 0, as Tony mentioned. So
but here's the thing, Avi. What happens in 10 years when the singularity happens? And then like, if you don't have the best,
I'm trying to make it to Thanksgiving. So with that being said, Pounders, I think we should wrap it up. Tony, any last final haikus for the audience?
Yeah, you have 2 levels. You have, if we break this, honestly, 3,800 right here, 38, what is it, 38, 38, 38, 40 on the S&P. That is a large volume shelf. That is a dive to the future, to the lows in June. If those break, obviously it's going 3,400. So there's that. However, I think a lot of what happened in the last like little while, like the what's going on next week with the raise, whatever happens there, CPI, this and that, everything. I wonder how much of that was factored in with last week as the NASDAQ had its worst week of the year. So we'll see. But I think it's just crucial to understand that the terrible market is showing you what is not so terrible. And that's the only thing you should focus on. If it's terrible, leave it. Don't even touch it. If it's not terrible, look at it and figure out what to do there. But I think that it's really, really hard to say like, oh, it's all going to go to 0, because like certain things will, certain things won't. And those things will go way higher because they'll take the value of what went to 0. So you got to think like now that this is going to be like the pandemic crash created a change. There's a very different crash. It will create a different change. And technology has been moving along this entire time. And like with all the issues we have of people needing so many more part-time jobs just to keep up, those are going to start going away more and more. Even if those get filled now, those will go away in like 5 years. So we have like a really, really difficult time in the world. And so for the market in general, like you got to look at the companies that are just like what Joey was saying, as easy as it is. And that is the only thing, right? Like you can trade whatever. If the market turns around, the shitty companies will go higher than the good ones. So there's a lot of different things that are going on there. But all I know is for right now, you just got to look at those main levels, because the market will rule all. Price rules everything around me. So that's all you got to look at.
Love it. All right. Give us a follow on social media. Follow Stocktwits. Again, I got a separate podcast that I popped up with Spread Investor for week 2 betting. If you're interested in the NFL, we'll post that as well. Other than that, Joey, anything else to say before we wrap this week up?
I would just say, continue to revisit all your positions. Make sure, your portfolio is bulletproof, because I kind of would echo what Druckenmiller says. We have no idea what's going to happen over the next 6 to 12 months. Things aren't looking all that great. So just make sure you're invested in the best of the best, and, keep it simple, stupid.
That's a big move. Big money, big moves. That's a big move. Yeah. They can play, don't talk about it. Master P, I'm bout it. This one here for all that try to count me out and they still counting. Honestly, I never doubt it. Say the top is never crowded. Well, I'm trying to climb the mountain till I need a few accountants. Stock is rising, perfect timing. I'm in Brickle with the tribe. Shawty sliding,